Hi guys, welcome back. Wow, everything was brutal today, so that's why I came to give you a market update. Out of all the index, Nasdaq is really the worst one, making a new low since April. So today it broke the support of this gap, and this shape does not look good because there is no rebound at all. On top of that, with selling volume. And right now it broke the support and not yet reached the next level of support. So it's in the middle, hanging around, still has room to drop. So that looks scary enough, right? Now remember last Tuesday, on this day, I drew a support of 13,278, and I expect Nasdaq to drop around there to get supported and bounce back. Today we reached the low of 13,401, so we still have 100 something points to go. This bar on the chart, it looks quite naked. It means that it was open low with no rebounds at all and just continue selling off all the way from the market open to the market close with no signs of rebound. So there is no good sign here. If we look at the mega cap, for example, Apple, last Tuesday when I was doing the market update, I said that Apple still has room to drop, and the next support that is stronger is around 123.5. So still has around 3% to drop further from this point. Especially the bull trap last Friday, this would just create more selling pressure. If we look at QQQ, the support is 325 and it dropped there with some rebound in the middle of the day in the afternoon. At this point, it reached 325 and it shows some signs of rebound, but then near the end of the market, the selling pressure was too strong. It gave up. So we close with the lowest of the day. That is a very bearish signal, and that's why we continue the sell-off in the post-market. Dow Jones was growing quite well in the morning, so that's why on the Discord I said in the morning that I would expect Dow Jones to create some FOMO here, so we can wait for the sector to rotate to the tech stocks for some rebound, while we can take advantage to trim some tech position if we are fully in tech right now. But in the afternoon, the tech sell-off was even driving Dow Jones to go down together. As you see here in Dow Jones, all the ones selling off was mainly the big tech stocks. Last week, I really expect Nasdaq to keep another 1 or 2 days of rebounds from a technical standpoint, because Nasdaq had been dropping for many days, and that's why the rebound should continue for another 1 to 2 days. And this was when I plan to trim all of my trade. So what drives this big sell-off? Because this is breaking the technical here. So this price movement tells me that it looks like the institutions are selling regardless of what price they are selling with, even if it's to cut loss. This is usually when they feel risk ahead, so that would be an alert that we need to watch out for carefully. And I think the reason that caused the big sell-off was because the institutions are detecting some risk alert, something they're worried about that might cause systematic sell-off ahead of us. And I see two possibilities. One is ARK Invest ETF that has been selling off massively for a while. Last week I shared that it's been the longest sell-off period that broke the record for a few years for ARK. And there is massive capital flow out of the ETF. And if this continues selling off, it might create some systematic risk, because as we know, the whole year of 2020, ARK had grew a lot in terms of their portfolio size. So that's why ARK sell-off would affect a lot of the other tech stocks and growth stocks. And if this sell-off continues, it would create some domino effect, just like what happened at the end of March with the margin call accident. We saw the massive sell-off in Chinese stocks because the article was holding mostly Chinese stocks. And this time, if ARK's ETF experienced the same thing, it would create massive sell-off and domino effects on a lot of the smaller caps and growth stocks, and especially the heavyweight stocks that are on the top of the portfolio of the ARK ETF. For example, Tesla, genomics, and Bitcoin related stocks. If we look at the chart here, we can see that it was breaking the trend line already. So that's why I think Wall Street is quite worried about that. They're worried that the same thing might happen like back at the end of March. And it would affect a lot of the hot stocks that are on the market right now. Because if this capital continues to outflow from the ETF, they would be forced to sell out of a lot of their position. So it would affect the heavyweight stocks. If you look at a lot of the top holding they have, you can see a lot of sell-off. For example, Tesla dropped 6% today. It's continued the sell-off since a few weeks ago already. But Tesla has its own issue because right now there is a lot of problems with Tesla going on recently. The PR crisis in China involving some political issue with the Chinese government as well. That's another issue. On top of that, they are the #1 position of our ETF. And also the genomic sector had been selling off for over a week. For example, the Pacific Biosciences, PACB, and Teladoc, which has accumulated to be one of the top holding of our ETF, has been selling off massively, breaking several supports. And today it even broke the 500-day moving average. That is quite concerning here. Even some of our Chinese stocks, because we know Baidu is the #1 Chinese holding of ARK, it has been selling off massively. And this sell-off is not 100% because of the political issue. I guess that would be a risk to invest in a stock that the popular ETF holds and endorse, because it's first the article and then now the ARK Invest. Both fund held Baidu as the top holding, their top position. So the margin call first drove the massive sell-off, and now institutions are also worried that the same thing might happen this time. We can also look at Pinduoduo, ticker symbol PDD. PDD has made a new low again for a mega cap stock to drop as much as 11% today. If we look at during the day, it was dropping at most of 12.8%. So for a mega cap to drop near 13%, that looks quite concerning. Not to mention, PDD is also one of the top holding of ARK Invest. They have been actively buying this. So I think right now institutions are quite worried about a sell-off, so that's why they continue to sell it first. The Chinese tech ETF KWEB dropped 5% today. For a large ETF to drop this much, it is quite some drama. It was mainly driven by the heavyweight stocks sell-off, especially Meituan and Pinduoduo. Because if you look at Meituan, it dropped 7% last night at the Hong Kong market. If we remember, a while ago we said that the government is starting the investigation on Meituan, and now we see that the government is meeting Meituan and Pinduoduo and point out their problems in terms of consumer rights. So a lot of investors are worried that it would create something like what happened to Alibaba a while ago. So that's why it's breaking the support and continue the sell off with some volume. For now, it looks like it's supported by the year moving average or 250 moving average. We need to see tonight if it can support. So that's why we see the big drop of the KWEB from some black swan news. But as I said in the Discord, right now we have some black swan for the mega cap. So that might be a chance to accumulate our shares on our favorite mega cap, especially Alibaba, because it's the only one in the mega cap right now that has been through this anti-probe investigation and already got the fine for it to close the case. So I see this as more of a safer place right now, especially with the recent drop. It has dropped to the 500-day moving average today and got supported for now. So let's see if this support of 219 can hold. Otherwise, the next support is 211. The earning is coming up on Thursday. While I don't see the earning to be bad for Alibaba, but who knows, because recently all earnings has been destroying the share price. So let's just get it over with, get the earning over so our mind can be more at ease. At most, I think the support of 211 should be quite strong. Worst case scenario, it can drop to 190. Around 10% of dropping, so not that much to risk. I think that would be the worst case scenario. It's too bad and quite disappointing for me because I really expect the A share and the Hang Seng Index to break out while the Nasdaq can be resting or consolidating. As we see that last night, it did not sell off at all. It was dropping 0.05%. So nearly flat, and right now it got supported by a 120-day moving average and still on an uptrend. So I was seeing it to break out anytime while the American stocks and Nasdaq could be resting, consolidating. But because we see even though Meituan had dropped 7 or 8% last night, it barely affected the Hang Seng Index. So in a way, this is indirectly a bullish signal. But now the US market has quite some sell-off. So we have to see. Same thing with the Shanghai Composite Index. Last night, it rebounded strongly from the support close with the hammer line with quite some volume. So it was a bullish signal and looked to me that it can break out anytime. Once it can break above this resistance of the 60-day moving average, we should see some sky ahead. But right now, I think it would take longer than we expect now. So today I saw our Discord member saying that in our portfolio today, the Chinese stocks have been dropping less than the US stocks, except for the sell-off of LKCO, of course. And NIO, it's mainly affected by Tesla, because right now Tesla is still driving the whole EV sector. As we see, Tesla dropped 6% and NIO dropped 7%, kind of walking hand in hand. All the EVs were dropping quite hard. If you look at Li Auto, it was making a new low of this year today again, dropping to be 16.8. So that's the same price on the first day of the IPO. In July last year, it opened at 15 and closed at 16.4. This is how crazy the EV sector is selling off. Xiaopeng is selling off less because it's the expectation of the earning that's supporting it, I guess. So whether it can go up or down from here would depend on the earning. LKCO has massive sell-off, which is expected anyways, to have sell-the news action, and it has gone up quite a lot recently, while all the small caps have been going down, making lower lows. And in this market, there's no exception. Don't forget that we are still in the phase of destroying smaller caps and tech stocks, especially the high-value ones. So right now, if there is capital flow, it would flow in the companies that are making profit and yet still got sell-off that are super undervalued right now. For example, again, Alibaba. This is what I would think if I'm an institution. If we have stocks that have been selling off by the destroy of tech stocks mainly and the market sentiment, while this company is healthy, generating massive amount of cash with fast speed of growth year over year, then why don't I buy the dip of this stocks that have good fundamental and cash generating with no risk of share offering, but continue to buy back their own shares? That's what I would think if I'm institution. So if we are holding the smaller cap stocks, we need to think about this. If this kind of undervalued mega cap stock with good fundamentals have been selling off, then we really shouldn't expect our smaller caps growth stocks that are not yet making any profit to rise before them. Don't you think so? Overall, I think right now the capital has been flowing out of Nasdaq, flowing out of even the stock market, maybe even flowing out of US. I think some smart money had been getting out to avoid the systematic sell-off I just mentioned. I said there would be two possibilities of the systematic sell-off and risk. One is the ARK Invest sell-off that might drive other tech and growth stocks to sell off, and the other one is crypto. Right now, crypto is getting really hyped up. We see different coins exploding almost every day, rotating between different currency. So I think institutions also see risk there that might potentially drive some sell-off in the stock market as well. So it might be a smart strategy to exit on the side first to keep some cash. And I also think some capital are flowing into India to short the Indian stock market because of the COVID getting out of control there. Because why not, right? As long as there's chance for money, they would go there. So right now I would exit all the short-term trade at any rebound to keep some cash, because if I have cash on the side, then I would be happy to see the market drop. The more it drops, the more we are happy, right? But if we have no more cash, then we will feel anxious and nervous when the stock market drops. Now for Nasdaq, to make a separate note, if we look at the weekly chart here, right now we are at a quite important level of the 20-day moving average. We look like we're breaking it today. And if we look at the past since COVID, Nasdaq had not broken the support of 20-week moving average. Every time it touched there, it always bounced back up. So this time, it's very critical whether we can close above this 20-day moving average by the end of this week to be above 13,494. If it doesn't, then I would trim my long-term position to keep more cash, okay? Now, that's it for what I want to share with you today. I'm not here to spread fear, but I just want everyone to prepare for the worst case scenario and always have a backup plan, so we're not scared when the market drops. Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.